Hi all, welcome back to the second video on hire purchase. Right, in the previous video what we did is we understood what is hire purchase, the parties of the hire purchase, what is hire purchase agreement, what is down payment, how to calculate interest and how to account in the books of vendor as well as hirer. Now, one more method in accounting is called interest suspense method. How accounting shall happen under this method, that we'll learn. Also we'll learn what is the difference between this method and the previous method. I'm taking an example. Here is 1425. Mr. X purchased a truck on hire purchase from Tata Motors. They are given cash price 50 lakhs, down payment 10 lakhs, balance in 4 equal yearly installments at 12% interest per annum at the end of each year. So this is the question. We have given cash price, we have given down payment, also told 4 equal yearly installments at 12% per annum at the end of each year. So first we should compute what is the interest portion and what is the hire purchase price. So I'm just dividing it into year 1, 2, 3 and 4, and I'll write cash price, down payment, balance, outstanding, interest at 12% and principal and balance. We can say principal, total, interest, principal, total. So year 1, the cash price in the question is 50 lakhs, down payment 10 lakhs. So balance at the beginning of year 1 is 40 lakhs. So from here the interest starts. This is the beginning. So interest is on 40 lakhs, which is 40 lakhs into 12%, 4,80,000. And principal payment should be 10 lakhs. Why? Because 4 equal installments, which is 40 lakhs divided by 4. So the total is 14,80,000. And after the first year, this column is irrelevant. Only the 4 columns are relevant. So 1480 is what the end of the year, the principal outstanding total. Now the principal outstanding will be 30 lakhs. Why? Out of 40 you paid principal 10 lakhs and the balance is 30 lakhs. This 1480 includes principal 10 lakhs and interest 480. But when you are seeing the principal outstanding here is 40 minus 10, 30. Now on 30 you have to pay 3,60,000 and your principal payment is 10 and total you are paying 13,60,000. And the third year your outstanding is 20 lakhs. On 20 lakhs again you have to pay interest of 2,40,000, 12% and EMI of 10, principal EMI, and then total EMI 1240. And at the beginning of fourth year your due is 10 lakhs because 40 minus 10, 30, 30 minus 10, 20, 20 minus 10, 10. And here you have to pay 1,20,000 and 10 lakhs. Total payment is 11 lakhs 20,000. And at the end of year 4, your balance shall be 0. If you see this question itself, your cash price is 50 lakhs and your interest here is 480 plus 360 plus 240 plus 120. Interest is at 12 lakhs. And your total payment is down payment 10 lakhs plus 1480 first year, 1360 second year, 1240 third year, and 1120. Your totally you paid 62 lakhs. This is your hire purchase price. So, as I told you, hire purchase price is a combination of cash price plus interest is your hire purchase price. So your cash price is 50 lakhs and your interest is 12 lakhs and your hire purchase price is 62 lakhs. How you paid it? Initially you paid 10 lakhs at the beginning of the transaction, and the first year you paid 1480, second year you paid 1360, third year you paid 1240, and fourth year you paid 1120. Put together you paid 62 lakhs, which is the hire purchase price. Now you should see how do I account it using interest suspense method. I am writing here journal entries in the books of who is the buyer? Mr. X. Mr. X. Which method? Interest suspense method. Journal entries in the books of Mr. X under interest suspense method. Now we'll see. My first date is 1/4/25. I purchased a truck. So I'll write truck only, right? Truck. So truck is my hire purchase asset. Truck account debit. Cash price is 50 lakhs. To Tata Motors, 50 lakhs. Being truck purchased on hire purchase basis. So the first entry is common, but here the second entry on the same date should be interest pay. First of all, we finish the down payment. Tata Motors account debit. I paid 10 lakhs to bank. Mr. X paid 10 lakhs. So we'll write B. Down payment made. So the balance payable to Tata Motors is 40 lakhs. Now in the previous method we are accruing interest as and when it is due, but here what we do here is on the same date, interest suspense method, what I'll write here is interest suspense account debit my total interest, which is 12 lakhs. Suspense, I'm not accounting as an expense. I'm creating an asset, suspense account. To whom I should give? To Tata Motors, 12 lakhs being total interest on hire purchase is debited to interest suspense account. So here what happened, your total Tata Motors payable now is 40 plus 12, 50 minus 10 plus 12 become 52,000. So you are showing the entire payable to Tata Motors at the beginning of the year. In the previous question, we are only shown 40 lakhs at the beginning of the year. Interest we are crediting to Tata Motors whenever it is due. But in this case, total interest we are credited to Tata Motors. So we are showing the total due, which is credit 50 minus debit 10, total 40 payable plus future interest 12 lakhs. So now Tata Motors is credited in our books at 52 lakhs, which is including interest. Now what happens at the end of first year? $31,326. I should pay interest expense, or I can call it as what? Finance charge, whatever the name I call it as. Right, debit. How much is the interest first year? 4,80,000. Accounted the interest, from where I should cancel to interest suspense. In the previous sum, what we did is interest to Tata Motors, but the entire suspense already paid to Tata Motors. Now I should reverse suspense because it is no more suspense, it is my first year expense. Right? Interest account, interest expense to interest suspense. Interest suspense cancel because first year interest already accounted for 80. So we'll write here being interest due debited to suspense account. Now, immediately what I'll do on the same day, I'll make the payment. Tata Motors account debit to bank, which is 480 plus 10, 1480, being first installment paid. See here, first installment is how much? 1480. Interest 480 and principal 10 lakhs. So 1480. I just interest suspense is an additional account I created. It is cancelled now. Debit 12, credit 480. The balance interest is only for the next 3 years. And at the end of first year, depreciation, assume the life again as 4 years. So without scrap, I'll write depreciation account debit 12 lakhs 50,000, 50 lakhs by 4 to truck account 12 lakh 50, being depreciation on truck accounted. And finally on the same date, what shall I do? P&L account debit to interest expense to depreciation, which is 4 lakh 80, and expense, not suspense, interest expense. Suspense already reversed for the first year. Depreciation 1250, 17 lakhs 30,000. Transfer to P&L will write being interest expense and depreciation charged to P&L. First year is completed. Now second year, what shall we do? Which is on 31/3/27. Again, I should accrue my interest expense account debit. 360 is my interest. Instead of crediting to Tata Motors, because I created the total interest to Tata Motors in the first year itself. So I need to reverse interest suspense account, because suspense account is debited with 12 lakhs. First year cancel 480, second year cancelling 360, moving to expense, asset to expense. Right, I'll write here being interest for second year debited to interest suspense account. The entire interest I created as suspense, but that is not the current year charge. Only current year charge I debit to interest and I reverse the amount which is there in the suspense to the extent of current year charge. Right? So being interest on second year debited to interest suspense. Now if you see, 12 lakhs is the interest suspense what we debited initially. We removed 480, we removed 360, only the balance still is 360 available in interest suspense for the next 2 years. Clear? Now immediately what I'll do, same date, Tata Motors account debit 1360, 10 lakhs plus 360 to bank 1360, being second installment paid. Now same year, at the end of the year, right, I should depreciate, depreciation account debit, straight line method 1250 to truck account 1250, being depreciation on truck accounted. After that, immediately what shall I do? Profit and loss account debit to interest expense to depreciation account. Interest is 360 and depreciation is 1250. Total 16 lakh 10,000 transfer to P&L, being interest and depreciation transfer to P&L. Now comes the third year, which is 31/3/28. 25/26 is the first year. If it is, see, the first year is, this is the first year, goes up to 25/26, and the second year FY 26/27. Now the third year is FY 27/28. Interest is payable on the last date of the year. So here again we should write interest expense debit. Last year, fourth year, third year is 240. to interest suspense, because we debited the entire interest to suspense initially. Reversing, it is no more suspense, it is interest. Initially everything is suspense because it is not that year interest, it is all the 4 years interest. Every year we are cancelling the suspense and transferring that year interest to interest account. So it is being interest expense debited to interest suspense account, not debited, credited to, I'm sorry, here it is credited to interest suspense account. And then 31/3/28, Tata Motors account debit 10 lakhs plus 2 lakh 40,000, 1240 to bank account 1240. Will write being third installment paid. As usual, same date we should write the entry for depreciation, straight line method 4 years to truck account being depreciation on truck accounted, and last entry for the third year is P&L account debit to interest expense 240, depreciation account 1250, 14 lakhs 90,000 being interest and depreciation transferred to P&L. At the end of every year, all the expenses shall be transferred to P&L account. In this case, we have only two expenses in this transaction. One is interest, the other one is depreciation. And the fourth year, the final year, which is 28/29, the first entry is interest expense account debit 120 to interest suspense account. Suspense account should be 0. If you see here, the beauty here is, see, observe the from day 1. In the day 1, the entire interest is charged to interest suspense account. So at the end of first year, you cancel first year interest, debiting the interest, crediting the suspense. So suspense became 12 lakhs minus 480, 720 at the end of first year. And at the end of second year, what you did, you credited interest suspense by 360 by moving to interest. So minus 360, interest suspense account, now the balance at the end of second year is 360. And third year, you again cancel 240 in interest suspense by debiting to interest expense. So it is 360 minus 240, the balance is 120. And in the fourth year, when you credit interest suspense with 120 and debit interest to that, the interest suspense account will become 0. It is a control account to write entire interest in the beginning to the vendor. In generally what we do, interest we accrue to the vendor as and when it is due. But in this case, the entire interest totally accrued to the vendor but not expensed off. Expensed off in every year by debiting the interest and crediting the suspense. Hope you understood the logic. It is a control account. Which account? control account. So being interest expense credited to interest suspense. With this, suspense account is actually zero. Now immediately what you should do, 31,329 is Tata Motors account debit 10 lakhs plus 120, 11 lakhs 20,000 to bank 1120 being fourth and final installment paid. Now the next thing is same asset account, which is depreciation account debit 1250 to truck account. We assumed a life of only 4 years without any scrap value. 50 lakhs by 4, 1250. So being depreciation on truck accounted, and finally profit and loss account debit to interest expense and to depreciation. Interest expense is depreciation is 1250, interest expense is 120, total 1370 transfer to P&L being interest expense and depreciation transfer to P&L. So here the important thing what we did is interest suspense we used as a control account because we want to show the total amount due to the vendor. The total amount due to the vendor on day one itself, which is 50 minus 10 plus 12. So 50 lakhs plus 12 lakhs 62 total due minus down payment, the due is 52, which includes 40 lakhs principal, 12 lakhs interest. So this is the one, the breakup. So first year you totally paid 1480 plus 10, 2480, and second year you paid 1360, third year you paid 1240, and fourth year you paid 1120. So how do you show this in ledger format? Very simple ledger format. Let us do this in ledger format. After all the 4 years, what I am doing here is ledgers. Now, 2 ledgers I prepare. The first ledger is hire vendor who is Tata Motors. I'll take the dates. My first date is 1/4/25 to 1/4/25, not 2, it is buy truck. I had to pay 50 lakhs. 50 lakhs. Then same date to bank I paid 10 lakhs. 10 lakhs and immediately due interest suspense 12 lakhs. So how much I shown? 50 plus 12 minus 10, 52 lakhs is total due to the vendor, and on 31/3/25 by I don't write any interest. Why? Because total interest is already shown here in the form of suspense. All the interest is shown here. First year itself as due, all the interest. Now, $31,326. I'll write to bank. I'll pay interest plus principal 1480. If you see my first year closing balance 62 minus 10 lakhs minus 1480 is 3720,000 to balance carried down, which is nothing but 30 lakhs towards principal, 7,20,000 towards interest. Total due here. What is interest? Total 12 lakhs, out of which you paid 480, still 720 due. So you are showing complete due to the vendor. So on 1/4/26, by balance brought down, you are showing 37 lakhs 20,000, and on 31/3/27 you show to bank, which is 13 lakhs 60,000, and to balance carried down 3720 minus 1360, 23 lakhs 60,000, which is nothing but principal amount 20 lakhs and interest 360 for next 2 years. Third year 240, fourth year 120. So everything is shown here, and then fourth year 1/4/27, by balance brought down, you are showing 2360, 31/3/28. To bank you paid 1240, and to balance carried down 2360 minus 1240, 1120, which includes 10 lakhs towards principal, 1,20,000 towards interest. So with this you can close the third year as 2360, and the last year 1/4/28, 28 by balance brought down 1120, and on 31/3/29 to bank you paid 1120. So this account is closed. So first year you are showing the total due, the principal and the interest both, and you paid 10 lakhs from the principal as down payment and 10 lakhs from the principal as principal outstanding first installment, and 480 from the interest. So the total balance in the first year is 3720, which has two components: principal 30 lakhs, interest 720. I'll write P and I. When you come to second year, the total is 2360, whereas principal 20 lakhs, interest 360. And third year when you come, it is 1120, principal 10 lakhs and interest, how much is due? 120. 2360, right? Out of 360 you paid 240 here, so 120. And final year there is nothing due, everything is paid. It means what? Here first year you paid out of 12 lakh, you paid 480 first year, so that balance is 720. Second year out of 720 you paid 360, balance is 360. And third year out of 360 you paid 240, balance is 120. And fourth year you paid 120, balance is big zero, balance is big zero. So this is the accounting of interest suspense account. What you're doing is you're recording the entire interest in the first year, debiting suspense to the vendor. Got it? Now, how this transaction will be recorded in the books of vendor? I'm only preparing the account, vendor account, when in the books. Ledger accounts in the books of Tata Motors. I'm not passing the entries, but ledger account. How do we do the ledger account here? Here, Tata Motors, what they do? Whose account they prepare? Mr. X account, because he is the one who is payable to them. So 1425 to truck. I sold the truck. Mr. X to truck. How much I sold? 50 lakhs. Same date. By bank, I received down payment. Right. And same date, in what is their interest suspense should be under the credit now. My income to be receivable. Mr. X to interest suspense account. I need to show total interest due from him. There it is. Interest suspense to higher than Tata Motors. Here it is. Mr. X to interest suspense. Right. And first installment 31/3/26. 31 I received first installment by bank 1480. So same replica mirror image. Their credits, here debits. Here debits, their credits. So it is 62 and the balance by balance carried down. 62 lakhs minus 2480 is 37 lakhs 20,000. See, the first year it is 3720. Here it is credit balance payable. Here it is debit balance receivable. Yes, and next 1426 to balance brought down 37 lakhs 20,000 and 31/3/27 by bank 13 lakhs 60,000. Same date. By balance carried down is 1360 minus 3720 is 23 lakhs 60,000, which includes 20 lakhs towards principal and 3 lakhs 60,000 towards interest. It means current year how much paid? 720 is the due, 360 is the due in interest, 360 paid in the current year. 360 plus 10 lakhs principal, 1360 is actually paid. Now 1427 to balance brought down 2360 on 31/3/28 by bank 12 lakh 40,000 and by balance carried down is 11 lakhs 20,000, which includes 10 lakhs principal and 1,20,000 interest for the last installment. and the last year, final year, to balance carried down 1120 and on 31/3/29 by bank 1120. So no dues, and entire amount is paid. So this is the X account in the books of Tata Motors, and this is the Tata Motors account in the books of Mr. X. For him he is creditor, like lender. For him he is debtor, receivable. So debit balance in the books of Tata Motors and credit balance in the books of X. So interest suspense account is a very simple understanding here. You are writing the entire interest payable or receivable in the first year itself against the vendor as payable, against the purchaser as receivable in the books of vendor. And whenever interest is due, debiting interest, cancelling the suspense. And in the other case, crediting interest income, cancelling the suspense. So it depending upon the person books you are doing, interest suspense is debit for the vendor, for the hirer, and credit for the vendor. This is the simple logic of interest suspense account. Hope you guys understood. I'm again going back and explaining you that what we did here is we actually computed the entire interest 12 lakhs. The entire interest we debited to suspense, credited to the vendor, and whenever due, debit interest, credit suspense for that year. Second year, debit interest, credit suspense. Suspense should be 0 at the end of fourth year. How it is? Let us pass this in the books of Mr. X. Interest suspense account. Guys, observe what I am doing. Year 1. To Tata Motors. How much? 12 lakhs. At the end of year 1, by interest expense, how much I booked in the first year? 480. And by balance, 720. First year done. Second year, year 2, balance carried down 720. By interest expense 360. By balance carried down 240. 360. Now third year, to balance brought down 360. By interest expense 240. By balance carried down 120. And the last year, year 4, to balance brought down 120. By interest expense 120. So this account is 0 at the end of fourth year. So it is only a control account. We are showing how much payable to vendor in the first year itself and cancelling by transferring to expense first year, second year, third year, fourth year. Exactly first year interest, second year interest, third year interest, fourth year interest in the suspense account. All these interests shall be transferred to P&L at the end of each year. So this is all about how to understand interest suspense account in hire purchase. In the next session, I'll be picking few sums from the CMA textbook and we'll be doing those sums to complete the entire chapter on hire purchase. Thank you.